In the Portland market, we've seen some significant changes from 2019 to 2020. One of them is vacancies have gone up a little bit. We were reporting at the fall of 2019, vacancy was about 4.4, 4.5, depending on what service you looked at for vacancy reports. We've seen a slight uptick in that through October of 2020 up to just over 5. Some of that's submarket specific. We've seen in the core due to some supplies coming online that number has gone up. In some submarkets in the outlying areas have actually held pretty steady in terms of vacancy rates. Rent per square foot, we've seen different numbers. Effective rents have gone down, but a rent per square foot, according to Multifamily Northwest's fall 2020 report, had a slight increase. But when you look at effective income, which also takes in consideration concessions, we've seen year-over-year income down, according to the apartment list, down 1.5%. We've seen other groups that show effective income is up 1.5. One thing to keep in mind when looking at these, sometimes tough to gauge concessions and things of that nature when you're trying to figure out net income. So, relatively, we think it's been flat. I think some submarkets have seen a decrease in the effective income. We've seen some increase in the suburban market as we've seen flight out of the city into some of these outlying areas by tenants. But overall, the rents have been relatively flat. One question does keep coming up with COVID have been the amount of delinquents, and we've seen that growing since this pandemic started in March. We've seen that increase in tenants not able to pay through, October, November, December were significantly worse than what we saw in March, April, and May. But overall, as a market, if we were having this discussion in April, I'd be very happy with where we've ended up in multifamily. Overall with the COVID issue. One interesting thing is we've seen permits continue to go down. We had that artificial kind of bump because of inclusionary zoning in 2017. That's why we saw significant units delivered in 17 and planned in 18 and 19. We've seen a decrease in that. Some of that has to do with the construction cost. We have not seen a decrease in the cost to bring new units online, as well as just the overall market conditions of, with added concessions and vacancies in this close-in core assets, the cost of bringing new units online is very cost prohibitive when coupled with some of the softness in the market. An interesting thing we have seen is this last year is more units kind of outside of the core being planned. We've seen Outer East Side had a lot of new units come on the board. Washington counties continue to have growth. Now, the interesting thing is these are things that are planned or under our perspective. It'll be interesting to see how many of these actually come to fruition. That is one thing from a tracking standpoint. It's very difficult as we talk with developers and things, people like that. They sometimes aren't going to tell you right away when they're going to shelve a project. So again, we have a lot of prospective units on the board. I don't think we'll see all of these come out of the ground, but the interesting thing is we are definitely seeing a push to some of the outlying areas for new construction, which again, back in 17 and 18, predominantly most of the new construction was close in Southeast, close in the core. So we are seeing a push out in the suburban market on the construction side. On transactions, we have seen a decrease in the number of transactions, both institutional and private client, from the high of 2016 in terms of volume and the number of transactions. We're down about 30% overall in transaction volume. Some of that is due to the fact that we had a pretty significant decrease in the number of institutional properties that traded this year versus 2019. On the private client side, we're down about a 27% number of transactions. So overall, the market will be down about 30% from 2019 in terms of the number of transactions. We have not seen a big significant increase in cap rates, as one would think with the reduction in transactions due to the low interest rates. We still see capital coming, looking to invest in this market, and that's kept cap rates relatively flat over this past year. Kind of a legislative update. We all know that they did a short session right before the holidays and did pass LC 18. They extended out the eviction moratorium. It doesn't fully compensate property owners. They're asking for 80%, and it only allocates $150 million for property owners in this what they call landlord fund. The interesting thing is they're going to try to prioritize small property owners. There's no definition of what that means. So there's a big question about A, it's just a drop in the bucket, and then B, how do you know, or what's going to be available when a larger landlord, and again, we don't know what that means, a larger property owner gets to the window. Is there going to be any funds left? Another interesting thing we've been trying to kind of get out to the public, it's not a property owner compensation fund. It really should be called a tenant obligation fund. Again, this is to the benefit of the tenants to get rid of their tenant obligations in terms of their rent. So again, just trying to change the narrative a little bit around this. But from our standpoint, it's great that they've got some rent relief money out there. We just don't want this to be the only measure that they're going to put in place. We've been pushing for LC 881, which is a income tax credit for property owners to offset the lost income from their tenants. One of the benefits of this is it will be funded by future revenue. So it's not like the state has to find the money today to compensate that. It also will allow the state to maybe get out of the legal exposure for a taking. And it rescues the tenants for, all the tenants for having their rents in arrear. Whereas the previous one that was just passed, if it's, the question I keep having for people down in Salem is if you've got a property owner that owns, say, 20 units or 50 units, whatever their definition of a large property is, what happens if, that building doesn't qualify? What are you saying to those tenants that are in that building that, they aren't open to getting any of those funds, which again, will not go to the property owner. So again, I think it was a nice idea to try to get some money out, but if that's the only solution they're going to have, it's just not going to work. Now we have, helped get together and get some lawsuits going. There's the Supreme Court has accepted the lawsuit challenging the Portland relocation fees that were put in place a couple years ago. That ruling will happen sometime in 2021. So we'll see that's still up in the air. There is a federal court case against Portland's screening and deposits ordinance. We're again expecting some ruling on that in 2021. There's also been a suit against the city of Portland, Multnomah County, and the state of Oregon regarding the moratorium on evictions and looking at it as an illegal taking without compensation. It's sad to say, but seems to be the only way to get some of these politicians in Portland and Salem to kind of really look at the situation and addressing it is threatening them or actually putting a lawsuit in place. And then hopefully this will generate more, fair and equitable solutions to some of these problems. Kind of our predictions for 2021. Again, some of it's kind of up in the air because we just don't know how this COVID pandemic is going to play out. But I don't think we're going to see any significant increases in interest rates. I think they're going to continue to kind of bounce around where they've been for the last 6 months. Vacancies, I would imagine, to stay relatively flat. We still do have immigration. Couple that with the lack of new supply coming online. I think once we get some of these newer units absorbed, I think vacancies will be flat. But I'm also saying I don't think you're going to see huge upticks in rent. I think some submarkets may see it, but overall, as a market as a whole, I think our rents will be relatively flat as they were in 2020. And same with transactions, though that could change depending on tax situations and things like that. I think you may see some private client. We are seeing private client groups making decisions with what happened with COVID, kind of long-term plans. And because of that, we're seeing more state planning, state selling, moving equities and things like that. I think you're going to continue to see permits relatively flat. I just think with the cost of construction, with what's going on with COVID, until this kind of gets shakes out, you're not going to see a lot, big uptick in permits. Unemployment will be up just as we're coming out of this situation. You will see growth in unemployment. Now will be as robust as last time, and we recapture the jobs that we had prior to the pandemic. It's going to take a little bit of time, but there will be a continued upswing on the employment. And we're also continuing to see capital inflow into this market. We've always been fueled by what happens in California. We've talked to people in Arizona. They're seeing the same thing. We've seen an uptick in equity coming out of California looking to invest in other markets, in Portland and Pacific Northwest. They're definitely on their radar. And again, I'm hearing the same thing with people that I know in Arizona. They're seeing an uptick as well as capital seems to be fleeing the state of California. I think it has to do with the pandemic, wildfires, just a general flow of some high net worth getting out of that market and looking for a place to invest. And we're definitely on the radar for that.